Hi, this is Lex, and welcome to the FinTech Blueprint. It's your podcast about fintech, decentralized finance, digital banking, investing, robo-advice, artificial intelligence, and all the other frontier technology that is transforming financial services. To get more content, like an illustrated transcript of this conversation in your inbox, subscribe at fintechblueprint.com. So without further delay, let's jump into today's episode. CJ, welcome to the podcast.
Thanks for having me.
I'm so excited for today's conversation. CJ is the founder and CEO of STEP, which is a fantastic neobank looking at the next generation of investors and their finances. And I'm really excited to have that conversation and to learn from you. But even before STEP, you've been an entrepreneur for a while and have built and sold a number of businesses. What pulled you into making things, into trying to start companies, and sort of like, what's your motivation with that?
Yeah, well, first off, thanks for having me. It's great to be here. So I kind of grew up just with the entrepreneurial bug. I'm a builder. I'm a 0 to 1 guy. I love to build product. I love to build teams. I love to build brands. I love to build go-to-market strategies. I love to break down brick walls and barriers that, kind of stand in front of me. And, throughout my career, I've, worked in many different industries, but a common theme have been very large markets that were ripe for disruption with technology and automation. My last company was a company called Gift. We built a digital gift card platform. We disrupted a $100+ billion offline market with a digital strategy. And, fast forward, a number of years later, trying to do a similar thing with STEP, just in the core financial services industry.
What does it mean to you when you say to disrupt a market or to go digital?
So, let's just talk about financial services, for example. Traditional banks' business model is you've got branches, you've got overhead. A lot of the money in a traditional bank is made through lending. And if you fast forward to today, the need for checks and cash and going into a branch and, talking to a teller as it relates to your money has become, less and less of a necessity. And so through technology and innovation, we can do a number of things virtually and digitally that, traditional banks aren't really set up to do. And with that, we can also both have more control over our own infrastructure and technology stack as well as over the customer. And we can pass things like savings where we don't have branches and overhead that traditional banks would have onto our customer base and not charge them some of the fees that traditional banks have historically charged their customers.
So if we meditate still a little bit more on your past and the entrepreneurial bug, when you were founding Gift or, Luminate, how did you get your insight? Like, how did you find the problem that motivated you to say that, this is worth my time to invest in being a builder and standing up the brand and standing up the team? What is the framework or the view that you take to a problem? How does it jump out at you?
I think every business has been a little bit different. With Gift, it stemmed from my wedding. I got married. I got a lot of gift cards for my wedding. I was frustrated as a consumer with kind of managing plastic gift cards and thought, why aren't these digital? Why don't these live on your phone? Why do I have to go to a store, buy a physical gift card, mail it to somebody in the mail? Why can't that all be done digitally? So I started doing research on the gift card market. 90+% of the market was physical cards and offline. And, there wasn't a great digital solution. This was also prior to, Apple Wallet or Google Wallet or Passbook. So digital wallets did not exist. And so we created, a digital gift card wallet, and then we created a digital gift card rack where you can buy and sell gift cards from your phone. With Step, it was interesting. A big inspiration for Step was my kids. I've got 2 young kids, and I was searching for kind of financial products and services for them to be able to kind of start to set their foundation around, their financial journey. And I couldn't find anything. And so I started doing a lot of research myself. I went to the movie theaters on Friday nights at 6 o'clock for a couple months, and I observed what the younger generation was doing and how they were interacting with money. Were they paying with cash or card? Was it debit or credit? How much were they spending? I also went to Starbucks after school at 2:30, right when school was getting out, and observed all the kids. And, again, did they come back the next day? How much did they spend on a daily base, on a weekly base, on a monthly base? And then I started doing focus groups, and I started talking to parents, and I started talking to teens, and I started really understanding both their relationship with money and just really understanding, what was important to them in life. We're a financial services company at heart, but we also think a lot about lifestyle. We think a lot about culture. We think a lot about, connecting with our customer base on a whole nother level, more than just money. And so for us, I wanted to personally understand this younger demographic. What clothing brands were they interested in? What music were they interested in? What games, movies? And if I was going to spend the next 10 years plus of my life building a product and a brand for a demographic that I am not, I truly wanted to firsthand hear and have collaborative discussions and interactive discussions with, both parents and our demographic being teenagers. And it was the most powerful thing I could have done, because I learned so much. And rather than sending a UX researcher to come back with information, I was hearing it firsthand. And it, I think, helped come back and craft, what Step was going to be in terms of a product, in terms of a brand. And, we're continuing to evolve from here.
There's pretty awesome insight in there. I think almost no entrepreneur does what you described, which is so key, which is that you actually start talking to your customer and almost embodying your customer and starting from a place of empathy rather than a place of, some sort of magnificent expert that knows how the world should be. So that's pretty fantastic. I also thought that, in describing what is digital, the point of why do you have this weird, chunky physical card experience? How can it live in the phone? For me, that's really a signal of what digital means, which is that we used to live in the physical world, and we used to go to bank branches, and we used to inhabit cafes and movie theaters. And not that that world is over, but that world is melted down very significantly. And people live in a digital social environment that's quite distinct and has lots of self reinforcing behaviors. And so I really agree with your point that financial futures haven't been really connected into that environment, which gets me into just the basic question of that you mentioned a couple of times, which is that you want to get kids in the next generation on their financial path. What does that mean? Like, what does it look like? What do you think is maybe not the right answer, but a good answer for somebody young starting to engage with financial product?
Here's what's always bugged us is schools don't really teach kids about money. A lot of families don't talk about money, and money's really evolved and changed over the years. And like it or not, money is kind of a crucial life skill that, rich or poor, you really just have to understand how to navigate the financial ecosystem. And it's really confusing. And I think for a lot of people, myself included, I still don't understand exactly the way FICO and, your credit score works. And it's a big black box. And when you look at some of the statistics, which are staggering, average American pays roughly $350 a year in banking fees. Average college student graduates with $4,000 to $5,000 in credit card debt and $35,000 in student loan debt. It's one of those things where I believe the way the financial ecosystem is set up today, it sets a lot of people up for failure. And so most people get their first bank account somewhere in their teenage years. Most people get their first debit or credit card sometime during their teenage years. Most people start either earning money through a job or receiving money through family or friends for birthdays, graduations, holidays during their teenage years. And they're starting to form good habits and bad habits around money. And so for us, when we looked at, what was available today, you've got large traditional banks, like Bank of America, Chase, Wells Fargo. You've got a number of fintechs that have popped up over the course of the last 5 to 10 years, but none of them are focused on this younger demographic and, kind of the sub 18 market. And since your financial journey begins there, we thought it was important to start there from a fundamental and a foundation standpoint, as we want to be that first bank account. We want to be that first spending card. We want to teach you, and financial literacy is just core to who we are and what we do. I mentioned in the beginning, I mean, our mission as a company is to improve the financial future of the next generation. And so from a product perspective, we spent a lot of time thinking about how we can build a product that doesn't set you up for failure. So we have this secured card. You can't overspend. There's no fees. It's the only product in financial services that helps you establish and build credit before you turn 18, because that's such an important factor of your financial journey. We spent a lot of time building our account and our card structure to support that. Most people just have a prepaid debit card and, standard checking account. And we innovated here, and we spent a lot of time working with, our partners and looking at the market and making sure that, what we put out was strong and secure and sound, and it's a big differentiating factor from a product perspective. Again, we don't charge fees. Most banks put a monthly minimum balance, or they charge you a monthly fee for your bank account. Most debit cards have overdraft fees where if you just happen to miscalculate when your paycheck's coming in and when you're trying to put food on the table, like, you might get charged the $35 fee. And so we tried to really think about the path and put ourselves in our customer's shoes of like what's best for the customer. And, we've got a long way to go still, but, we're a very hyper customer focused company that wants to do good by our customers and, hopefully have them stick with us for a very long time.
For the fintech geeks out there, what is kind of the product structure that you have in place, in the sense of what kind of market providers or banking as a service companies did you look at? How did you decide on the partners that you use today? And then like how easy or hard is it to create a cash account or a debit card these days?
Yeah, so it's a great question. First off, we spent a lot of time. We talked to all the various platforms that are out there. We talked to all the processors. We talked to all the, banks that offer kind of banking as a service. We looked at everything. And for us, that's also a big differentiating factor. We built a lot of our banking infrastructure in-house. There are companies out there that you can set up an account and start issuing a card relatively quickly. And by quickly, I mean somewhere in the neighborhood of 6 to 12 months. But we wanted to own as well as control our own destiny, and also control and help our customers and not put that in the hands of a third party. So we spent a lot of time there. Our tech stack compared to any other consumer fintech out there looks a lot different. We have a great partner in Visa on the network side. Evolve Bank and Trust is our banking partner. We have a great relationship with them. We do a lot of work with Stripe on the acquiring side as well as the issuing side. And someone like Stripe, for example, is newer to this side of the business. But I believe that when you talk about financial services and fintech companies, Stripe is some of the brightest minds in payments, and they've done a really good job on their core business. And we've got a great partnership with them that we think is very unique in the marketplace compared to a lot of the other fintechs that are out there today, that are working with more legacy providers.
Totally. So here's a bit of rhetorical question, I think, which is, God bless interchange, because it's a revenue source for a lot of stuff out there, right? Including, like credit in buy now, pay later is financed out of interchange, and banking services and lots of stuff is able to anchor in that revenue pool. And I think we're seeing that happen actually not just in banking, but in investing, where transaction costs have disappeared and moved into kind of like the market making revenue pools and so on. But given that you're making money off of interchange fees, do you think of yourself as a payments company, or do you think of yourself as a banking company, or something else entirely?
I mean, we think about ourselves as a financial services company. And, at the end of the day, money is, again, one of those things that you just have to kind of understand and have to understand how to navigate the financial ecosystem. But for us, I mean, we're not building a business or banking on interchange as like a core business model. Interchange is there. It's something that exists today. There's plenty of companies that have built a business on interchange. But I think we think about our customer journey, and we think about our brand, and we think about our product, feature set as much deeper than a card and interchange. A card or some sort of a payment vehicle to be able to spend your money, whether it's Apple Pay or a virtual card number, you need an identity to be able to, and we can geek out on crypto a little bit. I'm a big crypto nut, but you need some form of a payment vehicle, in order to transact, whatever that looks like from a tokenization standpoint, or, a card number. For us, it's bigger than that though, because we know that at some point you're going to need some help. And that's where things like lending come in. And there's a number of companies, Afterpay Affirm, that, have done this kind of buy now, pay later, or micro loan scenario where you can make payments over time, which is just a different twist to a revolving credit line. But I believe the problem with a revolving credit line and some of the standard credit cards that are out there today is the way they're structured. They kind of reel you in and say zero balance transfer fee and just bring all your debt, and you don't have to pay anything for the next year. And people do that, and then they overextend themselves, and then life happens and they start racking up credit card debt. And then after that 1 year honeymoon period, these card companies will charge you 30% interest, which is a lot of money. And you're constantly just trying to dig out of this hole. And so I think there's better ways to borrow, or better ways to do these micro loans. And so we think a lot about that as our customer gets a little bit older, and the ability to, help them along their financial path. There's things like investments in crypto that, as you get older and you make a little bit more money and you want to invest in your future, some financial institutions and services offer platforms where you can invest. And, there's obviously companies like Robinhood that have disrupted the likes of E-Trade and Charles Schwab, and there's a number of brokerage companies out there. But we really truly think about the path and the journey that our customers take, and establishing a trust factor with them at an early age, and growing with them, and being hyper customer focused, and providing products and services that they can relate to, that aren't predatory, that are fair, that are transparent. And we truly try to think about and put ourselves in our customers' shoes, just a great customer experience and a customer journey as it pertains to financial services. So we think a lot further down the line than interchange, and we truly try to innovate with the products that we offer our customers.
Absolutely. All makes sense. And I think what I was expecting is to turn the conversation back to, the answer is not we're a product company. The answer is we're a customer company, which I think it really kind of shines through what you do, which gets me to the psychographics and what does it mean for teens to do banking? So what did you find out in all those trips to malls and coffee shops, and I'm sure completely normal ongoing observation of young people hanging out?
I mean, I learned a lot as it pertains to some of the money aspects of what I was having conversations around. I learned there's just this big gap in the market. A lot of them still today operate around cash. A lot of them still get paper physical checks, and most of them don't have bank accounts or any idea what's out there or available to them, because it's kind of buried under these large financial institutions. I learned that a lot of parents don't even know where to start, and what they should do for their kids, because it's not crystal clear like what some of these larger banks or financial institutions actually offer specifically for the younger demographic. I learned that roughly 50% of households give some form of allowance, either on a weekly or a monthly base. I learned that roughly 75 to 80% of those allowances are just paid out in cash right now. I learned that parents are constantly being approached by their kids, with their kids handing them a $5, $10, or $20 bill, asking their parents to buy them something because they want to buy something online and they've got cash, but they don't know how to transact that in a digital format. And so I learned that a lot of kids are walking around with their parents' either credit card or debit card. So if they have a card, in a lot of cases, it's not theirs, which A, is not safe or secure, and B, is not actually teaching them anything, because they're just spending their parents' money, and they can't feel or see kind of that money going out of their wallet or going out of their bank account, because they don't have visibility into their parents' bank account. So again,
Yeah, that's a really interesting insight that kids are walking around with their parents' finances in their pocket. And it creates kind of a weird relationships too, doesn't it, to what money is and where it comes from and the type of lesson that you want to impart to your children.
100%. And like I said, a big part of our just mission is around financial literacy. And even if you think about cash, if you're out spending cash, unless you're actually managing and running a ledger or a checkbook, you don't really know where at the end of the month all your money went, right? And in a digital kind of environment, we can start to do things like categorize and say, hey, Lex, you spent 20% of your money on food last month, and that's up 10% from the month before. You spent 50% of your money on gaming on Fortnite, or Roblox, and that's up 30% from the month before. And then we can go back and look at 2000 or 2020 and say, hey, you spent $200 on clothes. And again, we can start to group and categorize and set out budgets and trends and history, and we can start to work with them for future savings and planning, and like, do you want to save up for this, and what does that mean? And it's hard to do in an offline world with cash or checks or anything like that. So that's part of our kind of core in building this technology and building this platform, is to teach and give visibility into how and where you're spending your money.
I want to ask about community and influencers and some of your investors. But before getting into that, I guess one thing that is on my mind is, timing and having the right infrastructure in place and being able to really pull this together. When you were going into the space before starting the company, did you look around at other startups or fintechs that were trying to go after this market? Like colloquially, I remember a couple of different sort of teen education or allowance tracking or splitting apps, but nothing seemed to take for a while. Whereas Step has grown pretty unbelievably. If you saw, like, what were some of the pitfalls of the past that you were able to avoid in building the company?
Yeah, it's a great question. I mean, there's been a number of attempts or swings at different aspects of teen or child or family banking. Some of the stuff that has been out around allowances or chores, to me, that's a feature, right? Like, that's stuff that we can put in, but it's not a core business that can stand on two legs and be a multi-billion-dollar generational business and brand. I think there's just a number of things. I mean, we truly took time to build the right product for our demographic. And part of it's also a timing thing. I think we're fortunate that over the last 5 years, banks have kind of warmed up to this idea of being able to partner with financial service companies like ourselves. I think from a cost perspective, things have gotten a little bit more cost effective, but I'm a big focus guy, and we've just been kind of laser focused on this demographic. We built the product, the brand, specifically for kind of this teenager demographic. We wanted the brand to be aspirational. We wanted the product to be aspirational. Again, we wanted to teach. And we've done things just a little bit differently than any other companies that I've seen out there before. And we're still in the early innings, but we're growing rapidly. We're excited about kind of the future, and we've got really good and positive customer feedback and engagement on our platform at this time.
Cool. So tell me about your approach with influencers and with your investors and kind of tapping into the cultural zeitgeist. Like, how do you think about social? How do you think about picking the role models for kids that you have? How did all of that come together, whether it's, the investment round or whether it's figuring out how to promote on TikTok and all of that?
Yeah, so I mentioned early in the conversation, I mean, at core, we're a financial services company, but we think a lot about lifestyle. We think a lot about culture. We think a lot about building for our demographic. We're laser focused on this 13 to 18-year-old demographic right now. And a 13 to 18-year-old has kind of grown up in a digitally native environment, and they've grown up on mobile devices. That's all they kind of know. It's a generation of instant gratification where they expect things right away. And for us, the ability to create content that they can relate to and kind of tell our story and build a brand was something that we thought would be important to relate with them and kind of connect with them. And so we've kind of just leaned in. We're very active on social media. We think content is extremely important. We want to create content that's both educational and aspirational and relates to who our customer is. On the social side, there's a number of influencers that have grown platforms, whether it's TikTok or Instagram or Facebook or Twitter or YouTube. And we thought it would be powerful to connect with partners that relate to our customer base. So we have a partnership with Charlie D'Amelio. She's 17 years old today. When we met her, she was 15 years old. Largest TikTok following for anyone in her age, and for one of the largest on TikTok as a platform in general. We partnered with Josh Richards. Both Charlie and Josh are now investors in our company. So we've done a number of partnerships with teenagers that are kind of right in our core demographic that can relate to our demographic and help basically tell our story to millions and millions of people. Today we're in the US, potentially go international down the road. And if you asked pretty much any teenager in the US if they know who Charlie D'Amelio is, a very high percentage of them will know her. And so if she in any way, shape, or form is talking about STEP or connecting, some of the key benefits of the STEP platform, it's pretty powerful. In order for us to have a relationship with anybody under the age of 18 in terms of a financial relationship, we want and we need to have parent involvement in the equation. So we've partnered with a number of investors that happen to be athletes, actors, actresses, entertainers, musicians, and most of the adults that we partnered with have kids. So, for example, Justin Timberlake is an investor, Stephen Curry is an investor, Will Smith is an investor, Alex Rodriguez is an investor. All of these folks that I just mentioned are investors, and they have platforms, but at core, they're parents and people. And, I talked to them about their experience raising their kids as it pertained to money and, what they did and what was missing. And it all resonated with them, what we were doing. And so to partner with them and both give us credibility as well as be able to partner and tell our story together, it's a powerful thing. So we've just kind of leaned into culture and lifestyle and trying to connect with our audience in some unique ways through content and not only content, but user generated content that's authentic and organic.
I mean, that's unbelievable and amazing, just because banking and fintech a decade ago is so boring, and so many people just, allergic to the idea of financial services companies. And it's just fantastic to see such a human telling and such deep interest in making people's financial health and their lives better. So that's awesome. On the generational point, like, one of the things that I've been really trying to figure out or get a pulse on is how Gen Z versus millennials relate to technology and to social media, and what the behavioral differences are between what it means to be digitally native for Gen Z in your demographic versus what it means to be a millennial fintech user. There's some ideas I have about those differences, but I'd love your take in terms of what you're saying for how Gen Z's engaging with finance for sure, but more generally, like culturally and across media.
Yeah, so I think there's these 7 to 10 year generational gaps, right? Where, I mean, let's just look at kind of the evolution of social media, right? Like MySpace came out and kind of took off, and they took off in the music world, and there were a lot of artists and whatnot. That's kind of where MySpace started, and then it started getting a little bit more mainstream and whatnot. And then all of a sudden, I mean, MySpace was growing rapidly, and Facebook came out, right? And Facebook, I think, obviously started off on college campuses with college students and whatnot, but Facebook started to go a little bit more mainstream, starting off in the college demographic and kind of started aging up, as it expanded and grew. Facebook grew rapidly and was kind of took over MySpace. MySpace quickly goes away. And then you have Instagram come out, right? And if you think about it, Instagram started to skew probably 5 to 10 years younger than the core demographic that was on Facebook. And Instagram had a slightly different angle with really focusing on quality images, and it was less posts and more around the image. And it started to kind of take off around a slightly younger demographic than who was on Facebook. And then Snapchat came out, and Snapchat went 5 to 10 years younger. And then TikTok came out, and TikTok went 5 to 10 years younger. I think, to answer your question, when you think about whether it's Gen Z or millennials, I think that these generational folks and these different demographics, they kind of want something that's theirs. They want ownership. They take a lot of pride in ownership. They're smart, they're creative. They don't want necessarily to be doing the same thing as their parents. And they don't want to be wearing the same clothing brands. And they don't want to be listening to the same music. And they don't want to be banking at the same bank. They don't want to be on the same social media site. Like, they want something that's theirs. And I think money's no different. And even at the demographic of a, call it millennial versus Gen Z, I think in terms of Gen Z, they are very, very intelligent and very, very specific in terms of their demands and needs. And like I said, I think there's just a lot more instant gratification. When you look at the millennial demographic, I mean, there was obviously 2008, where a lot of folks saw their parents or their families struggle through the downturn in the economy. Anyone that was younger, that was a part of kind of the 2002, 2003, 2004 kind of downturn, I think that hits people very hard and in different ways. And so when you start thinking about money, Gen Z, they don't necessarily want debt and credit and some of these things the same way that their parents or some of their older families and friends have done it. So to me, there's this kind of like generational gap, that there's different needs and different expectations as it pertains to kind of lifestyle in general.
Yeah, nobody wants the old stuff, and yet here we're still going to Wells Fargo branches, right? It's quite.
Yeah, but think about this real quick. Like, I got my Wells Fargo account, my first bank account, when I was 13 years old. I had a paper out for 6, 7 years. I got paid in cash. I had shoe boxes of cash under my bed. I was literally counting my money one day, and my dad walked in my room and said, "Holy cow, like, where'd you get all that? And what are you doing with that under your bed? We got to go to the bank." And so my parents banked at Wells Fargo. So naturally, they took me down to the branch, and we spent a couple hours filling out the paperwork, and I got my first bank account. That bank account at Wells Fargo that I got when I was 13 years old is still my main account today. I would never, when I was 13 or 14 years old or today, even think about putting on a Wells Fargo hoodie or t-shirt, or walking around with a Wells Fargo water bottle. I don't really relate to the brand. I have a card with horses and a stagecoach on it, which I understand with an institution like Wells Fargo, some would say represents trust and longevity and this, that, and the other. But like, horses and stagecoaches, we get people that are writing in every single day asking us how to get a step t-shirt or step hoodie, or if they can get a step backpack because they saw one on TikTok that somebody was wearing or that an influencer was wearing. That's kind of part of the branding and the aspirational side of things that I think is very unique compared to some of the legacy brands and providers.
Before COVID, I remember going to a Cybos conference, which is, the sort of mega bank industry get together that is expensive for everybody, just to be in a place with these like conference exhibits that people bring over. So whoever has the best plastic board flashing computer screens at you, I guess, wins financial services props. And I still remember the Wells Fargo carriage. Like, they not only did they have this giant carpeted sort of behemoth castle of a thing, but next to it was this giant plastic carriage. And at the time it was 2019, and people are talking about the metaverse and rendering the planet Earth in VR and walking around it, and kids spending a ton of their social time in Fortnite, as you said, collecting skins and trading crypto and slinging code on blockchain. And here we've got like a plastic giant carriage in a conference hall. So I think that disconnect is I mean, it's natural as part of the human condition. It is what it is, but it definitely opens up the psychic space for the good new stuff. And so I guess I'd love to close out with a question about, you mentioned crypto a little bit, and I wonder what you think both in terms of STEP and how it could potentially touch digital assets, but then also how you see that market, the 13 to 18-year-olds who are looking to build community, looking to belong and signal social status with whether it's NFTs or meme coins or whatever. What kinds of things do you see there in that conversation that could be projected out to, really the future of money and investments?
I mean, look, I'm fundamentally just bullish and a believer in blockchain as a technology and a platform. I think we're in the early days of a very long game, and I think there's been a lot of development and innovation, over the course of the last 8 or 9 years. But I think there's just a long way to go. It's not mainstream. It's not there yet. I think when you think about digital currencies, right? And we talked about obviously kind of the generational gaps and the different generations. The kind of the Gen Z millennial market understands it more than anybody because it's kind of what they grew up with and it was introduced to them at an early age. So it's there for them, where I think some of the older demographics and generations just don't truly understand it, and change is hard for them. And so for kind of a older demographic, it's change. And for a younger demographic, it's kind of what they grew up with hearing about in one way, shape, or form, from the early days of their life. So I think the younger demographic kind of embraces it more, and it's more of a known entity than any sort of a change. So I think that there's massive opportunity around payments, around financial services, around blockchain, and around kind of cryptocurrencies and digital currencies in general. It's just you're seeing this shift, right? Like cash is becoming less and less relevant. I think the pandemic just actually accelerated that. You see more and more people accepting contactless, and you see more and more people accepting mobile and digital payments and currency. That was out of necessity, but I think it also showed that, hey, what do we need some of these physical payment, methods for? So I'm excited about it. I think as it pertains to STEP, we're definitely thinking about it and thinking through what the future holds and how it can fit into our platform.
Awesome. Well, if you need a MetaMask integration, just let me know and I'll help you set that up.
I appreciate that. We probably will.
Yeah, no problem. We probably have a bit of a customer base overlap over there. I mean, it's amazing because in the crypto world, the people who are actually building this stuff are very often very young, and being free from having to anchor to core banking and the payment rails and the processors and spending 15 years to learn what payment technology is. In large part, all that stuff is now just open sourced, and you can plug in code into it and off you go. You're an institutional money infrastructure. So I'm pretty excited for what Gen Z can do with that. I think it'll be pretty spectacular.
I agree. I'm 100% with you there.
Cool. Thank you so much for joining us today. It was really interesting to learn about your journey and the company. This will sound like a silly question, but if our listeners want to find either you or STEP, where should they go?
You can find me on Twitter at CJ MacDonald, or feel free to send me a note, cj@step.com. Or feel free to go to step.com and download our app and give it a shot.
Awesome. Thanks so much, CJ, for joining us today.
Thanks for having me. Really enjoyed the conversation.
Hi, everyone. That's it for this week's episode of the FinTech Blueprint. For more technical deep dives into all things fintech and decentralized finance, check out fintechblueprint.com and grab a free subscription to the newsletter. This is Lex, and I'll see you next time.